Good day, guys. How are we all doing? I hope we're all good. So I thought let me do a Candlestick Trading Bible video. It's more like a follow-up to the reading we once did. So if you don't understand this book still, just sign up for our mentorship. You can also join the 2025 Day Trading Mastery Bootcamp, which we also have available at the moment. So we're not going to waste much time because I don't want to make this video or videos too long. So if you don't have this book, one of the best books to read for you to actually understand candlesticks. So we're just going to quickly read through the candlestick patterns. That's the main thing we're going to touch on. So if you follow our videos, you hear me talk about the famous four. If you've purchased the course, you hear me also talk about the famous four. So what we call the famous four mainly is the engulfing bar. So that can be your bullish or your bearish candle. So let me just try to, okay, yeah. So it can be a bullish engulfing for buys, a bearish engulfing for sells. You also hear me speak on the doji candlestick. So let me actually highlight this as well. So on the doji, I always just compile them into one. I don't really like dissect them to say this is the dragonfly, this is the gravestone. I just put them under one bracket and I just refer to them all as the doji. And if you follow our sessions as well, you also hear me speak on the pin bar. So the pin bar is also called the hammer, right? This is your pin bar pattern. Then you also hear me speak on the inside bar. The inside bar is also called the harami pattern. These are the main candlesticks which we actually use on our day-to-day trading, especially for those people who've been following my videos. If you've been wondering where do I actually get my candles from, this is the book I went through, and I'm just going to touch on these main candles again so that you guys don't get too confused. All right, so let's quickly get into it. So we're quickly going to start on probably page 14, page 16, somewhere there. So let's see. All right, so I'm assuming everybody understands the candlestick formation. So I won't really get into this unless, of course, you want me to elaborate again. Then you can just write in the comments, then I'll look into it. So I'll also try to be fast as well so that we don't waste much time. So we've got the engulfing bar candlestick pattern. So what is the engulfing bar? The engulfing bar, as it states in its title, is formed when it fully engulfs a previous candle. This is the main parts we want to focus on. An engulfing bar is simply a candlestick which covers the candlestick on its left. So let's just scroll down to the visuals. I would have drawn, but let me just use the visuals in the book. So I'm also not going to read through most of the notes because I've already gone through this book. The main thing I want to do here is to highlight the main candlesticks. So this example is the bearish engulfing bar. And you can see to the left, you've got a smaller candle, and to the right, we've got a bigger candle. So this is an engulfing bar. So if it's a sell candle, it means it's a bearish engulfing bar. So I'll just go to the charts just now after we go through these candles, then we'll just go through all these candles. All right, so a bullish, okay, this is the bearish engulfing. So a bearish engulfing usually appears at the top of a trend. So again, the main thing you want to focus on is the location of the candle. It has to happen at a certain point for it to mean something. We're not just picking random candles and saying, okay, this is a bearish engulfing, so we're selling. No, you actually have to check the location of where your candlestick is appearing. So in case of a bearish engulfing bar, this pattern tells us that sellers are in control of the market, right? This is when basically your sellers step into the market. And when this pattern occurs at the end of an uptrend, this indicates that buyers are engulfed by sellers, which signals a trend reversal. See the example below. Excuse me. All right, so as you can see, this price was pushing up, nice bearish engulfing there. If you also notice, there's this little candle, we're going to talk about it just now. That's actually a doji in there. So we're going to speak on it just now. So let's see what's next. The next one is the bullish engulfing bar. So it's still the same engulfing bar. So we've got the bearish and the bullish. So the bullish, again, same thing. It's just a simple candlestick which engulfs the one on its left, and it will be showing you that it's pushing up. So depending with your color candles, if you're buying candles are green, it will be green. If you whatever color you've got on your charts, that's it. So it also has to happen like at a point of interest, be it a moving average, be it a support zone. I think we'll actually get an example just now. There we go. So here you can see we're in a nice downtrend. Then price initially created this low. So again, I'm going to be adding more concepts for you to actually understand when and how to use these candles. So again, if you see it, you just want to look to your left. This also helps you to know that, okay, this is actually a point of interest, because in my books, this point was the first low. So this was actually a liquidity sweep. And soon as we got that liquidity sweep, we got a nice bullish engulfing bar, and that signals a reversal of this downtrend, which was happening right there. So the example above shows us clearly how the market changes direction after formation of a bullish engulfing pattern. The smaller body that it represents the selling power was covered by the second body that represents the buying power. So this is just simple explanations in the book. Then we get to the doji, right? So we've covered the bullish engulfing or the bearish engulfing, or rather the engulfing candlestick. So now we're going to the next candlestick, which is the doji candlestick pattern. So the doji is one of the most important Japanese candle patterns. When this candlestick forms, it tells us that the market opens and closes at the same price, which means that there is an equality uh, and indecision between buyers and sellers. There's no one in control. See the example below. So yes, your doji, even if you see in my examples, I don't try to complicate it. I just put a plus, right? So it simply means the price opened right here and it pushed up, came back down, and this was the highest point of the candle. Then it pushed down and came back up and closed right where it opened, and this was the low of the candle. So the candle will just be looking like this. It's just like a plus sign. So if you see it, if your price is coming up, just know that price is potentially preparing for a reversal, especially if this area is a point of interest. And also, if you see it happening on the bottom, if price was coming down and it's happening on a point of interest, it also shows price is preparing to go up. But again, one other thing I want to mention is these candles, you can also use them when you're in a trending market. If you're using moving averages like myself, if your price is going up, for example, and this is like the 13 EMA, if you see a doji forming on the 13 EMA, so your price will be pushing like this, right? So when they create a higher low and you get a doji, chances are the price will just be reacting off a point of interest, which is the moving average, and the bullish move will simply continue. So you should actually know when and how to use these candles. So you can see this is the example of a buy. Price pushed up. This is usually visible. If you're a day trader, you should check your M15. Most of the times you get this candlestick patterns usually on the M15 time frame, sometimes on the H1, but of course they appear on all the time frames. But if you're a day trader, of course, your main time frames for the day is the M15. So reference to look for these candles would be preferably H1 and M15, sometimes M30. So this is an example for sell. Let's see, what do we have here? So now they break it down. Excuse me. We've got the dragonfly doji. If you hear me in my videos, don't worry about these big names, because usually people get confused when these big names are mentioned. So do not worry about these big names. Just know that a doji is a doji. There's just like variations. The same way you get variations in setups and entries and stuff like that. It's the same thing with your candles. This is just a variation of a doji candle. So a dragonfly doji would look something like this. Sometimes you hear me call this a pin bar. So don't worry about the names. The thing is, you should know exactly your point of interest. So once you know your point of interest and you see any of these candles, then you know that you can actually execute. So a dragonfly is a bullish candlestick pattern which is formed when the open, high and close are the same and at about the same price. What characterizes the dragonfly doji is the lower tail that shows that resistance of buyers in their attempt to push the market up. Okay. So the reason I also just call this a pin bar is because sometimes it will be looking like a hammer like this. So you might hear me refer to this as a pin bar, so please do not get too confused when we get to the charts. So this is a perfect dragonfly. Okay. Okay, here's an example. Price was pushing down. We had a nice, so on my charts, you actually hear me say here's a pin bar because it actually looks like a pin bar candle as well, although it's a variation of a doji. Then you see it was followed by a bullish engulfing, which was also followed by a pin bar. All these are signs for you to actually enter a buy. So sometimes it might be hard for you to pick exactly where your price is turning. But if you see that price is now pushing up, for example, maybe you are at this candle or you're at this candle. If you look to your left, then you can start to pinpoint like, okay, here's a dragonfly doji, or here's a pin bar, here's a bullish engulfing. That sort of gives you that edge to actually now be confident in getting a buy setup. So like I said, if these candles also happen, like there's a moving average somewhere in there, just know that if there's a moving average and you get a doji like this one, that's an entry. If you get a doji like this one, that's an entry. So it's all variations and understanding where these candles are actually appearing and how to use them. If a candlestick appears somewhere, like maybe in here or in here, you can see here, this is not really a point of interest. So you cannot say, okay, I'm buying or I'm selling because it's not really a point of interest. So you should know when exactly to use them. Here, yes, it's that candle, but it's got no use. But here, yes, it's that candle and it's got a use because price was coming down and most likely we had like a support zone right here and price is now reversing. So in the chart above, the market was testing the previous support. Okay, there we go. That caused a strong rejection from the area. The formation of the dragonfly doji with the lower tail and tail shows us that there is a high buying pressure in the area. Okay, let's scroll down. The next one is the gravestone doji. Again, this is also like a variation of the doji candles as well. So let's just check how it looks like. It's just like in the opposite of the one above. So again, like I said, don't worry about the names because if you follow the names too much, it becomes too like technical and it becomes like too hard because you'll be like, okay, is this the gravestone or is this the what? Don't worry about the names that much. Just know that it's a doji, and if you see it happening at a point of interest, you should actually get ready to look for a setup. So these ones usually appear at the top. I'll show you examples just now on the chart. So here we had a bullish push and we got a nice gravestone doji here, or rather a doji. I usually don't use these first names. We just got a doji, or sometimes you can just call it a pin bar because it is a pin. Then the price just retraced. So chart above shows a gravestone doji at the top of an uptrend after a period of a strong bullish activity. The formation of this candlestick pattern indicates that buyers are no longer in control of the market, and for this pattern to be reliable, it must occur near a resistance level. So it's all about points of interest. Each time you get to my charts, or if you go to the course or my videos, you hear me speak on POI. POI simply stands for point of interest. So your point of interest either has to be like a moving average, which can be a dynamic a dynamic support and resistance, or it can be a fixed resistance level or a fixed support level. So let's see. As a trader, you will need additional information about the placement and context of these doji candles to interpret the signal effectively. This is what I'll teach you in the next chapter. So these chapters, we already went through them. I'll try to drop a link in this video as well so that you can see it. Again, here's another variation I usually refer to this as a doji most of the times, morning star and then evening star. So your morning star, all right, to make it easy, a morning star just if we say morning, it's in the morning. So the day is starting here. So it's happening at the bottom and price will mostly push up. An evening star, we just say we are at the top, is the end of the day and price is about to drop. Not necessarily meaning that it happens in the evening and this happens in the morning. It's just like the names that the morning star happens when price is on the bottom. The evening star happens when price is on the top. So Morningstar pattern is considered a bullish reversal pattern as it often occurs at the bottom of a downtrend and it consists of three candlesticks. Yeah, usually it's the candle in between two bigger ones on its right. And most of the times, the one on the right is usually a bullish engulfing, most of the times. So if we are on the charts, you will rarely hear me speak on morning stars or evening stars, but you hear me speaking on doji. So this one, I also classify it as a doji candle depending with how it's appearing and how it's looking when we are on the actual chart. So let's see the evening star. Okay, there's your morning star on the bottom. This pattern, if you are a day trader, H1 is your best time frame to look for this pattern. And most of the times it appears on the second leg, and most of the times there will be liquidity being taken to your left. So these are also some of the points you need to understand. So all these terms I'm mentioning, those are like individual topics which you as a trader actually have to go into, research into, and I'll just try and see if I can do some of the videos, but all this is explained in greater detail in our 2025 day trading mastery course. So it's also usually on the second leg. So in my notes, I always say, if you see a pin bar or a doji, you can see how this is like a morning star, but it actually a doji right there. So I usually refer to this as a doji. So if you see a doji on the second leg, just know that it's a high probability trade. That's one thing you should just take note of. So when we go to the charts, we'll try to look for examples whereby we can actually see some of these moves. So yes, they appear on all time frames, but if you're a day trader, you want to locate this especially on the H1 time frame. And just to confirm it, another thing. So remember after every, because this will be a lower low for the day. So let's just assume this is H1. This here will be an order block. So for this doji or morning star candle to have a high probability, the order block has to be broken. So this is just a signal to show you that your setup is forming. Doesn't necessarily mean that you can actually take a buy here. Of course you can, depending with the confluences, but the safer buys always happen after the break of the order block is confirmed. So this will be an OB right here. So soon as we break, then you know that, okay, this morning star or this doji was actually valid. So the chart above helps us identify the morning star pattern and how it is significant when it is formed at the bottom of a downtrend. As you can see, the pattern occurred at an obvious bearish trend, blah, blah, blah. So let's just quickly scroll. So I'm just checking my time because I want this video to be under 30 minutes. All right, so let me quickly finish up, then we can go to the charts. So the opposite of a morning star is an evening star, like I said. So this is considered a bearish reversal pattern. So evening star will be looking something like this. And again, I also refer to this as a doji. So if you follow my videos, I'll just pinpoint it like this. Price will be coming up. You see that candle. Just know the chances are your price is going to go down, especially if it's a second leg to a pattern which is already forming, and especially if you see it on the H1 or sometimes the M15, just know that your price will be getting ready to reverse. So here is a textbook example. Evening star, price actually melts. So as you can see, price was trending up. The first candle in the pattern indicates a long move up. The second one is a short candle indicating price consolidation and indecision. In other words, the trend that created the first long bullish candlestick is losing momentum. Basically, they're just speaking on this push up and price is actually about to reverse. So just remember that initially when this price was pushing up, this is the first doji we actually got. So what makes this doji invalid and what makes this doji valid? You can see it's the same candles. All right, so this is what makes this one invalid. It's because this one is not on a point of interest. It's just a random candle in the middle of a price movement. But the second one is happening at a point of interest. There has to be something to the left-hand side to show you that, okay, this is a point of interest. It's a strong resistance zone. So if you see that doji appearing there, chances are, high probability, chances are the price will actually reverse or retrace. So I think that's it. Let me see if there's any other candle. Okay, then we go to the pin bar. So you can see the pin bar is looking like those other candles which were above. That's why I was referring to them as a pin bar. They almost look alike. So I just give them the same name because the job is literally the same. So people also call the pin bars the hammer. And the pin bar is one of the best candlesticks I use in my trading, especially on trending markets. I mainly look for the pin bar, and if I'm going to look for buys, if I see, okay, if price is coming down, we see a pin bar, number one, that's a nice sign of a reversal. If price was already pushing up, like I say, creating higher highs, higher low, and when this appears right on a moving average, for me, that's a sign to actually buy as well. So these are just different ways you can actually use these particular candles to actually look for trades. So here's an example of a buy. Price was pushing down, nice pin bar, right? So if you see here, price pushed up, retraced. This for me is a doji. So if we were to have a moving average here, that's a point of interest. That means I might miss this trade, but that doesn't mean I'm going to miss the move. First push, retracement, second push, retracement. So if you're in an uptrend, just know that this can also be an entry right there. So I'll show you when we get into the charts. Let's see a sell example. My apologies for my speed. I don't want this video to be too long because I know people don't have much time to be going through long videos. So again, shooting star, or a bearish pin bar. You can see they just put like fancy names. So if you try to like cram these names, you end up getting confused or getting lost. Just know that a pin bar is a pin bar. If it's a bearish pin bar, you know you're looking for sells. If it's a bullish pin bar, you know you're looking for buys. You just try to keep it as simple as that. So this one usually appears if your price was coming up. If you see it, just know price is about to go down. Again, if you see it on a second leg of an H1 taking out liquidity to your left, just know that this becomes a high probability sell setup, right? That's one thing you should take note of. And if your price was coming down like this in a downtrend, and maybe you've got your moving average, and this candle appears right here, again, just know that that's a high probability sell setup. And another example, in a downtrend, sometimes you get equal highs and the pin bar appears right here. Again, this is a point of interest, as you can see. So it also shows you that there is high probability that your price is going to go the other way. So this is an example here. It happened on the first leg, then the second leg just continued melting without dropping, which is still perfect. So I'm not going to read through this. If you guys want to read through this book, if you haven't read it already, I think this is your sign that you should actually read this book, because it is one of the best trading books I can recommend to you to understand candlesticks. So again, another fancy name, the Harami pattern. For me, you just hear me say an inside bar. Just like the name says before we even read what it is, an inside bar simply means it's inside a bigger bar like this. So to your left, that bar will be small. This is the inside bar. It's inside a bigger bar. So if price was coming down and you get an inside bar on a point of interest, signs or most probably it actually showing you a sign that your price is about to retrace or reverse going back up. And again, if you see to the top side, so let's say your price was pushing up and you get one big candle here as price is hitting a point of interest, then you get a inside bar right here. It shows that probability of this price actually now reversing and pushing down is actually high. So the harami pattern, or the pregnant in Japanese, is considered as a reversal and continuation pattern, and it consists of two candlesticks. The first candle is the large candle. It is called the mother candle, followed by a smaller candle, which is called the baby candle. So basically, that's your inside bar. So again, like they say here, it's considered a reversal or a continuation. Like I said, again, if your price is in an uptrend and we are coming down here, we get a bigger bar and we get an inside bar right here, maybe with a moving average or it's a broken resistance, which is now support, simply means it's showing you signs that it's a high probability buy area. So I hope all this is making sense. So let's see, for it to be valid, the second candle should close outside of the previous one. The candle is considered as a bearish reversal signal when it occurs at the top and vice versa when it's bearish. Okay, we already spoke about that. So here's a clean example. Bullish inside bar. So here your price would have been coming down, or it was actually an uptrend like this, and we are looking for a continuation, or price was coming down like this and we are looking for a reversal. The opposite is true for a buy, sorry, for a sell. So this is an example of a sell. Here price would have been coming up inside bar, now price is coming down. Or your price was actually pushing down like this, then it hits a point of interest inside bar and it continues pushing down. So if you need more elaboration on this, you can still go through the videos of this book, or you can just read this book, because you can see I'm skipping a lot of narration because I've already went through this book on the playlists there. You can just scroll down from the very first videos, you will see where we went through these candles in greater detail. So let's see, here's clean examples. I'm happy here they showed an example of a buy. You can see right here, price was coming down. Then we got a nice inside bar, which was followed by a bullish engulfing, followed by a pin bar. All these are confirmations, guys. So when you're trading, it doesn't mean that you need to catch your entry right here. No, 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 no. You can still catch your entry here. You can still catch your entry here. You can still catch your entry here. And as you see here, there was still quite a good move coming back to the top, excuse me. And again, the opposite is true for a sell. After the bearish inside buy, you can see here it's actually looking like a doji. That's the reason I was saying do not stress much about the names of these candles. Just pay attention to how they look and pay attention to where they occur. That's the main thing. Once you get that right, then you should be good to go. So that's an example of a sell. In the chart above, you can see how the trend changes. Okay, that's just what I was explaining basically. Then these candles, I rarely speak about them, even on my course. I rarely speak about them, but let me mention them here. This is the tweezer bottom. This usually occurs if your price is coming down. All of a sudden, you get one big bearish candle and one big bullish candle, then your price will reverse. It is true for a sell. If your price was coming up, you get one big candle right at the top of the trend, then you get one big sell candle, and they are usually the same size. That just simply shows that your price is about to reverse. So some call them the tweezer candles. Some call them the ara candlesticks, or railroad tracks, because they simply look like it's a railroad track, right? If you're following like your BTMM strategy, these are railroad track candles. Like I said, don't stress much about the names. Just focus on how the candles look like and where they are appearing on your chart. So this is an example of a buy. This is an example of a sell. So it's just two candles of the same size, basically. That's what they're saying here. So you can see here price was coming down. Again, here we might have had a moving average if you're following my strategy. So if it appears here, for me, this is a sign to sell. I can actually take a sell, especially if it appears, if these candles appear on a higher time frame like your H1. I can even take a sell here and probably take profit somewhere in here, depending with my risk to reward ratio. But here is an example of a buy, since they're happening at the bottom of the trend. So that's a clean example of a buy. And also pay attention to how when your price is moving, we have this broken zone here. What candlestick do you have forming there? We do have a doji. So your price is coming up, bouncing, continuing with the push up. This here means nothing because it's literally not on any point of interest. So that's also one thing you should just take note of. So chat above, blah, blah, blah. I've already spoken about that. I'm sure they will throw another example. Let's see here. Patterns exercise. So here, I think they actually want you to identify the names of the candles. So since we're here, so let's quickly jump into the charts and we can try to locate these candles. So we're just going to pick a random chart. This is US oil. This is the 4-hour time frame. I'm also going to try to just look at multiple time frames. But again, take notes when I'm explaining these candles now, I'm incorporating them into my trading strategy. So you see me speak on the moving averages most of the time. And the moving averages on my charts right now, we've got the 13 EMA, which is the red one, because somebody might ask which moving averages I use. These are different from the ones in the book. I use my own. And these are inspired by BTM moving averages, by the way, for anyone who might be curious. Then we've got the 50 EMA, which is the aqua or the blue one. Then we've got the 200 EMA, which is the black. If your background is black, this moving average should be white, right? So that you can see it. Then we've got, last but not least, the 800s, which is navy. I don't use the 5. There's also a 5 EMA, but I don't use it because I feel like my chart will now have so many lines. So I only use this 4. And on the bottom, I always use the TDI indicator for my confirmations. Right. So I don't know, where do you guys want us to start? Maybe let's not start too far. Let's just look at the current market price which we have for this past week. So if you notice, first things first, price, this is a 4-hour chart. Okay, so this is just last week. So on the previous week, price was started by pushing up. All right, we had one pin bar here which could have signaled a sell. So let me speak on examples where sometimes these candles you might get a stop loss hit. So here you can see price was coming down, price was coming down. So here you could have anticipated a sell, yes, but then price would have taken you out with this bullish engulfing candle here. But again, like I said, remember these pin bars, they appear usually in an uptrend. So it's not only reversals we are looking for them. Even in an uptrend, you just need to know your point of interest. So with our trading strategy, our point of interest is the 13 EMA. Somebody might be using a 20 EMA, somebody might be using an 8 EMA, somebody might be using a 5 EMA. It's the same thing, guys. You should just make sure that your candles are appearing on your moving average. And if you have moving averages on your chart, you should know how to use them. I'm not really going to get into those details now. But anyways, this moving average right now is signaling a buy. So if we are buying, like I said, this pin bar here means nothing, but this one on the bottom means something because we are actually buying and it's appearing on the 13 EMA, right? So that's number one. Price pushes up into the 800 EMA. Like I said, we've got a point of interest. We also have this order block here. So let's just mark that all be there as a point of interest. Right. So when we first got here, you can see we got the first sign of a reversal. We got this pin bar. That means you could have taken sales coming back to your moving average. So this is a bit advanced now. You are in an uptrend. So if you are selling here until you break something to your left, you are still in an uptrend. So if you're still in an uptrend and you get a bullish engulfing here, you can buy. If you get a pin bar here, you can buy, bearing in mind that you've got this order block number one, and you've got this first initial high of the week. Remember, sometimes or most of the times, price does not just reverse like they did here. Again, this is also an example of a pin bar whereby price was pushing up and we got a nice rejection pin bar here, then price melted. If you see, we also have this inside bar. So these are just confluences, right? So you don't just get like a pin bar in the reversal like this. Signs like these are very rare. Most of the times you get a pattern like this, like an M pattern. Sometimes you get a head and shoulder type of a pattern. So if you see your price coming back to the top, you mark this line as your point of interest. And that point of interest is also appearing right inside what? Inside an order block. So also remember at some point, this candle was solid green. So always wait for a candlestick close before you decide on what to do. You are not just buying here at the top because the price is broken an order block and you think that it's coming up. You are actually waiting for that candle to actually close to get the clearer picture of what price wants to do. So if you had seen a pin bar closing here, that's a sign that your price is about to reverse. We are in a point of interest, which is an order block. It's also a second leg and it's a pin bar. Just like I said, if you see pin bar on the second leg, high probability price will actually reverse, which is exactly what happened here. And we started breaking levels here, breaking an order block here, and your price just continued to drop all the way to the other side. So I'm just going to highlight these candles as I see them. So pin bars there. Here's another pin bar here. All right. Here, somebody might be asking, so on this one, where is the point of interest? Right. Just look to your left. To my left, you see we've got this pin bar, which actually took something out to the left. Second leg, bearish engulfing, signaling a sell. Price pulls back into the moving averages right here. These are more pin bars, but again, we are talking about this level. So the narration of the story here is this. After this high was created, we had a bearish engulfing, signaling that we're about to sell. So price actually dropped, pulled back, dropped, pulled back. The reason I trade with moving averages is this. I use my moving average as a dynamic resistance if we are selling, right? And I use them as a dynamic support if we are buying. So here you will notice that as this happened, this bearish engulfing happened, we left an imbalance here, which is a fair value gap. This is also explained in greater details in my 2025 day trading mastery course. So the initial sell was here with a reaction of a point of interest, number one. So we have these pin bars or dojis or whatever you call them. The only thing we know is these are valid candles to give us a buy, to give us a sell, sorry. And price actually dropped, gave us another reason to sell. So here you see I'm just combining everything. So the same point of interest is the same point of interest where we got this particular pin bar. Then price actually also rejected on the 200 EMA. Then we actually started melting down. So again, I'm not really just entering because I've seen a pin bar. I'm still waiting for confirmation. So personally for me, I might even wait for price to close back below the 13 because again, until I get this close, there's no guarantee we will drop because price might just hit these moving averages, hit this order block here, break this zone and still push up. You get it? So as much as you see these candles, just know that these candles are signals to show you that a setup is forming. So if a setup is forming on a point of interest, it just raises or increases the probability of the setup playing out. Then as more confluences start showing, agreeing with the signal and your point of interest in whatever is forming, then you can now get ready to execute your trade. So we're just going to scroll to the left again. This here is an example of a nice downtrend. So I'm so happy there's many candles which we can speak on here. All right, so we're just going to start from here, right? Price was going sideways. Remember on H4, if you've got period separators, this is just representing 1 week, 1 week, 1 week. So you should also know all these things if you're a day trader. If not, get in touch with me, jump into our mentorship, or just get the course because I get way, way deeper and way, way into more details with these particular setups as well. So that should actually help you if you're still struggling. So what you notice here is this week started. There was no direction here. Price was just like choppy, as you can see with the small candles. But when we got to our moving average, we actually found that this moving average is acting as a dynamic support. What I mean by dynamic support is we have fixed support and resistance areas. So if price is coming to the bottom, this is your support, right? If price is coming to the top, that's your resistance. I'm just going to put an R. So these are fixed areas. But if you've got moving averages now, they are dynamic. Dynamic simply means they are not fixed, right? So if price comes in, hits that moving average and fails to break and continue below, it simply means the moving average is acting as a support zone. So we've got a dynamic support. We had a couple of candles here. If you don't understand them, wait until you get one which is more clearer. So here we got this nice pin bar followed by a bullish engulfing. So again, to just break it down, if you are trading, if you're a day trader, if you see this happen on a higher time frame, like H4, for example, right? You jump now to H1 and you're now looking for a confirmation of a buy so that you can catch this push going up. Maybe I'll try to do a quick example to just show you how everything comes into play to give you a setup for the day. So let me actually mark that area so that I don't forget. And when I close this video, I'm going to close by showing you this particular trade. So you just mark it like this. You go to H1, M15, M5, M3, depending with your trading style. So again, like I said, we had these first highs for the week, which were extended by this push up. Then at the top, we had our first doji. From here, there is no guarantee you're going to sell until you start seeing price come down. That's number one. And until you get a close below the 13 EMA. So we're not just randomly selling because we've seen a doji. We want more confluences. We want more reasons to sell. And again, remember this area here was it was a resistance which was actually broken. These highs here, they were actually broken, right? So until price comes below like this, there is still no guarantee that you're actually coming down. Otherwise, price actually bounced, as you see here with the pin bar. It could have simply continued pushing up. So again, this is a variation of an area where it's a point of interest. You get the pin bar, but price is actually reversing for the week. So this becomes invalid for a buy. So which means if you had taken a buy here for some reason or thinking that your price is going to continue up, just use this level as a point of interest to guide you through that buy. So if you see price push, yes, you're in profit. But what do you do if you see this close below your zone? Simply means your price is turning the other way. And if you're still in the trade for some reason, you actually just have to cut your losses and focus on the next good trade. So those are just some of the things you need to look at. So it's not all about candles. You actually need to understand how your price is actually moving, mark your points of interest, and get a better entry. So soon as we get this close, we're now pushing down, right? So here is another doji. This really doesn't mean much. You could have considered this a bearish engulfing. This is also a bearish engulfing. But again, personally, I want my setups to appear near the moving averages, depending with which direction I'm going. So if I'm selling, and I've noticed that this is now a downtrend forming. I'm looking for my price to retrace back into my dynamic resistance and give me a familiar candle for me to actually execute. If I do not see any familiar candle, I have no reason to be in that trade. So here there is an inside bar. We are on the 13 EMA. We are in a downtrend. So I know that I can sell. I also know that the Candlestick Trading Bible told me that an inside bar can be used as a continuation pattern. So I know this is a sell continuation. Again, price pushes up a bit. You might have considered this for a sell. Still valid in my books, although it didn't really touch the 13 EMA. But depending with how you were taking your profits, this liquidity sweep above this high might have taken you out. Again, these are all the things you need to know. So if you need more details or more info on how to trade these setups, just get in touch and I'll help you out. Again, here's another bearish engulfing. Sorry, here's another pin bar. We actually had an inside bar initially because it's inside this particular candle, followed by a pin bar. So you can still look for sales here. Here's another doji. You can still look for sales here. Here we are in a strong downtrend. So if you read through the candlestick Trading Bible, they will get to a part where they're speaking on trends. So if you guys want me to do a video on trends, specifically trending markets and how to use these candles, also just write in the comment section there, and I'll be able to do that video for you and explain a little bit more in greater detail. Here, I'm just pinpointing the candles, right? Bearish engulfing, doji, pin bar, inside bar, pin bar, doji, bearish engulfing. So it's a strong downtrend which was happening literally for like 2 weeks or 2.5 weeks, right? So once you pick a trend, remember trending markets are the best markets to trade. So I'm not going to speak much about candles now. I just want you to see this example. This was on the 15th of January 2025. I'm going to backtest for you guys where we got a close of this pin bar. So I'm just going to just make sure that we are right there. I'm going to show you how I would have taken a buy on this particular day. So my price has hit a point of interest. The H4 is closed, showing a pin bar. These lows have been taken out by this week. It shows me that it's a liquidity sweep, so I can now start looking for a buy, right? So once I see that, I then jump to H1. So now this is what we call multi-time frame analysis. So we're going to scroll to the 15th of Jan. Right, when you come to the H1, what do you see? On the H1, you see that my price for the day opened here. This was the low of the previous day, right? That H4 candle has closed somewhere in here, somewhere in here. It is closed. We already have another pin bar on H1 showing us or confirming for us that we have a sign or high probability of pushing up. What confirmations on this chart do you see for you to actually say you are buying? So H1, personally for me with my trading strategy, I need my price to be above the 13 EMA to confirm the buy, right? That's number one. Yes, my price is now above. I'll also notice that I've got this nice inside bar before we also had this pin bar which took our liquidity. So now I'm adding confluences. So these are signs for me to actually take a buy. So as soon as I see the first candlestick which closes above the 13 EMA, this is where I start getting interested to actually enter the trade. If I look at my TDI, excuse me, if I look at my TDI at this point, I'll notice that I had a squeeze, right? Halfway, half on top of the 50 static, half below the 50 static. So I'm waiting for a breakout. Of course, the breakout happens a bit late into this candle, but I would have been in this trade already. If you missed this, based on our strategy, you simply want to wait for a retracement and an entry or a reason to enter again. So our point of interest is here. So after I confirm that my H1 is bullish, what do? I then go to, okay, let me remove this. I then go to M15. So remember, it's multi-time frame analysis because I am a day trader. So if I'm a day trader, my entries have to be on the smaller time frames, personally for me anyways. So go to the M15, January 15th. Okay, sorry about this, guys. Just have to scroll a bit. Okay, we're about to finish. We're about to finish. If you're watching from the beginning until now, thank you so much. And this lesson is actually going to get to an hour. So I'm sorry about that. But trust me, this information will help you out. All right. So remember where we marked our H1 closes just above the open price. That's what I was just paying attention to. So now I'll notice that I'm starting to have pin bars right above the 13 EMA, pin bars right above the 13 EMA. At this point, I can take an entry anyway here. I can take my entry here. I just have to make sure that my stop loss is below these candles, or at least below the 200 EMA, because I'm also using my moving averages as a point of interest. So my entry at any of these points, even here, it's still fine, right? This is what I do if I miss the first push. Like I said, I wait for a retracement into a point of interest. What do I get? Bullish engulfing. Another retracement into a point of interest. Remember, these are some highs which I marked earlier, which have been broken now and are being retested by a pin bar. This is actually a variation of a pin bar candle. I'm in that trade. If I miss that entry again for some reason, inside bar. If I miss that again, pin bar. So this only shows you that trading can be simple. It's not easy, yes, but it can be simple if you understand what's happening, especially on a bigger time frame if you are day trading. So you can see just from one candlestick, which signaled to us that we are potentially pushing up, we ended up going to H1 M15. If we missed the buy from here, coming back to this level, we saw that retest, we could have been in this particular push up. All this starting from just one H4 pin bar happening on a support zone or in a dynamic support zone. So I hope this helps somebody who's struggling. I'm not really going to continue. If you guys still need to understand this book, if this is your first time, I would advise you to read the book. If you don't like reading, I would advise you to go through my playlist of the Candlestick Trading Bible, where I go through the book from page 1 to the last page. Then, if you still need help, then you can get in touch with me. Then maybe we can do a mentorship type of setting whereby I can help you on certain areas which you need to understand. And don't stress about claiming the names of these candles. You don't really have to stress much about that. Uh, just know that these candles have to happen at a point of interest. And the best areas where you can get these candles are when your price was pushing down and you get a reversal at a point of interest. You can see here we had a pin bar, we had an inside bar right on the 200 EMA. At the top here, we had pin bars right on this resistance area. Pin bar here, the price is not so clear because there's no trend, but this is a valid pin bar if I was to take a trade here. But if your price is choppy like this, I would advise you not to trade. But once you pick that you are in a bullish trend, especially if you're using moving averages like me, you should know that if you see a bearish engulfing, you can see this was a pin bar plus a bullish engulfing, sorry, that confirms a buy. Then we broke above this point of interest and we managed to get another pin bar right on the 13 EMA, which is a dynamic support. These don't mean anything here because they are not on any points of interest which we can use for either a buy or a sell. But if they happen on a moving average, the probability of this price pushing up is high. Here's another doji or pin bar, whatever you call it. This one means nothing. This one means nothing. This one means nothing. All these here mean nothing. But these ones appearing on my moving average, they mean something. This one appearing here, remember what's the name of this candle here? Those who were paying attention when we started, that's a question for you. I'm going to ask, you can just write the candle is such and such in the comment section. I'm not going to go along so that we can see that you are paying attention from the beginning. But this is one good textbook entry. We are right at the top of this day, right? If you look to your left, you're supposed to just find something to show you that price is actually selling. Then here we get another doji or pin bar, right, on a dynamic support, which is also on this red line, which was also a point of interest for me. I'm not sure where it was coming from, but yes, that's also a point of interest. Price continued pushing up. And from there, what other candles do we see? Price continued pushing up. We took out this high. We got the first pin bar here, the first sign that we can potentially sell, followed by a bullish engulfing, followed by an inside bar, followed by a doji, followed by might qualify as a bearish engulfing. But if you don't understand any pattern here, do not take the trade until price action is clear, because this is an intraday reversal and we were in a bullish market. So sometimes it might be hard to see such setups. So if anything is not clear, do not take the trade, right? So I think that's it for me today. I don't want to exceed an hour now because this video has been long. Please support my community on Telegram, support my community on WhatsApp. On WhatsApp, I'm mainly running the mentorship community there. Then on Telegram, it's just mainly for synthetics, but we do share setups all around from your currencies to synthetics, booming crash, synthetic indices as well. And these candles appear on everything. So let's quickly check oil. I'll quickly show you an example. Okay, did we touch on oil? I think we did. Okay, we mentioned this, right? We mentioned this, but I want to show you guys something, right? This was H4, M15. Do you see what we had here? Price was coming down from the time the day opened, with trickling down, lower lows, lower highs. Then from this high, we took our liquidity with a pin bar or a doji or whatever you call that candlestick, but we know it's one of the famous four. As long as it's one of the famous four, you are in that trade. If you want to wait for an order block to be broken, bearish engulfing still perfect. You can still enter your trade here, and from there you can see the day still ended in a nice bearish move. Any entry you might want to take here might be late. It might still be valid, but it's always good to take your trade right in your point of interest. So again, this would have been also visible today on Boom 1000 with some nice dojis here with a nice setup. If I show you where we exited and where price is right now, you'll actually laugh, right? We figured out that price is bullish. I'm not going to go into this whole setup, right? We figured out that we are bullish. So we started expanding up. We got dojis here confirming a bullish trend. We got into this trade, we exited here, and we were done. If you missed this, where is your next best entry? Your next best entry is when price gives you one of the famous four, which here was a pin bar or a doji right near the 13 EMA. Another buy happened. This would have been valid if it had happened on the 13 EMA, but there was so much acceleration or so much momentum in the markets. So if you want to understand how to trade the markets when there is momentum, after it has confirmed, you actually have to go through the course as well so that you can get a better insight and better information. And again, the course comes with 1 month free mentorship. Um, if you just want the mentorship, you can just purchase the mentorship on its own, but you need to understand how price moves, because mentorship is just me helping you like do your trade management, your entry exits and stuff like that. The course, however, comes with everything from your basics, how a candlestick forms, comes with all the indicator packages, and it comes with 1 month free mentorship as well. So if you watched until the end, thank you so much for joining. Enjoy the rest of your day. Good trading. So I'll try to link the Candlestick Trading Bible course, and I'll try to link the video of the Boom 1000 trade which we took earlier, so that you can just understand what goes on when we are looking at a setup before, during, and after the trade. Thank you so much for watching until the end. Comment also with what you took from this lesson. I also want to hear what you guys took and what you guys would like to see me maybe speak on, especially on the Candlestick Trading Bible. Thank you so much, guys, for watching. Enjoy the rest of your day. Good trading.